Hey there, savvy investors and short squeeze enthusiasts. Welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential squeeze plays. Today, we're peeling back the layers on a specific name that's screaming for attention on our screeners, VTAK Precision, Inc., trading under the ticker VTAK. This isn't about generic theories, it's about a live, dynamic situation with real numbers. We'll break down exactly why VTAK is showing up on our radar right now. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, who is VTAK Precision Inc.? VTAK operates in the healthcare/medical devices sector. They design, manufacture, and sell cutting-edge medical technologies for cardiac electrophysiology, helping doctors with complex heart conditions in the US and Europe. Their lead product, the View Interventricular Onset System, offers non-invasive 3D cardiac mapping, which is a big deal in EP. With a market cap currently sitting at just $2.03 million, VTAK is a micro-cap, and that often comes with its own set of unique dynamics, especially when it comes to short interest. What is cost to borrow and why it matters? Before we get into VTAK specifics, let's quickly explain the cost to borrow, or CTB. This is the annualized fee that short sellers have to pay to borrow shares of a company which they then sell, hoping to buy back cheaper later. Think of it like renting a car. You pay a daily fee. For short sellers, this rental fee is calculated annually. A high CTB is crucial because it signals two things: high demand to short a stock, and critically, a low supply of shares available to borrow. When these fees climb well above 100%, sometimes even into the hundreds or thousands of percent as an annualized rate, it tells you that the market to borrow shares is extremely tight and expensive. Why this stock is hard to borrow right now. Now let's talk about why VTAK has landed squarely on our hard to borrow screener. The numbers here are truly eye-opening. The current cost to borrow fee for VTAK is an astounding 919.0% annualized. That's not a typo. And it gets more intense. The CTB has seen incredible momentum, rocketing up by plus 275 percentage points over just the last 5 trading days. This rapid increase signals a sudden, massive surge in demand to borrow shares, or an even more dramatic drop in their availability. Speaking of availability, there are currently only an estimated 25,000 shares of VTAK available to borrow across brokers. Emphasize scarcity when you consider the estimated float of 2.0 million shares. 25,000 borrowable shares is an incredibly tiny fraction. This scarcity is a huge part of VTAK's hard-to-borrow profile. Our composite squeeze score, which factors in CTB, supply momentum, and technicals, currently pegs VTAK at a significant 58.6 out of 100. Despite this, the stock has seen downward pressure recently, down minus 17.72% today, minus 8.45% over the last 5 days, and minus 26.14% in the last 30 days. Volume has also been low today at 2,243,900 shares compared to its 30-day average of 13,695,403 shares, giving it a relative volume of just 0.2x average. This low volume, coupled with high CTB, creates a fascinating setup. Squeeze mechanics explained. So how does a squeeze happen? A short squeeze occurs when a stock's price surges, forcing short sellers to buy back shares to limit their losses or meet margin calls. This buying pressure, in turn, pushes the price even higher, trapping more shorts and creating a snowball effect. For VTAK, with that astronomical 919.0% CTB, short sellers are under immense daily pressure just to maintain their positions. If the price of VTAK were to start climbing due to positive news or increased buying interest, these short sellers would face escalating losses and crippling borrow fees. The combination of high fees, incredibly low borrowable supply, just 25,000 shares, and a relatively small float could mean that any sustained buying pressure might force shorts to cover their positions, potentially igniting a significant short squeeze. However, it's vital to remember that a high cost to borrow does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. One of the biggest killers of a potential short squeeze is dilution. Dilution happens when a company issues new shares, which increases the total number of shares outstanding and can devalue existing shares. From a squeeze perspective, new shares can provide liquidity for short sellers to buy back and cover their positions without driving the price up, or simply suppress any price appreciation. For VTAK, our check found no recent dilutive SEC filings like SMINS1s, SMINS3s, or 424BS in the last 90 days. We also found no recent reverse splits in our look-back window. This is a positive sign for any potential squeeze thesis, as the immediate threat of new shares flooding the market and offsetting short covering appears to be absent. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For VTAK, keep a close eye on a few key indicators. First, continue to monitor the cost to borrow fee and the number of shares available to borrow. Will the CTB climb even higher from 919.0%, and will the borrowable shares drop below 25,000? Second, watch for any significant increases in daily volume that accompany upward price movement. A sudden influx of buying could be the catalyst. Third, look for any fundamental news out of Katha Precision, Inc., perhaps regarding their view into ventricular onset system or other product developments that could change the sentiment and trigger buying interest. Katha Precision, Inc., VTAK, presents a compelling case study for hard-to-borrow dynamics with its astonishing 919.0% CTB, dwindling borrowable shares, and no immediate dilution risk. While the stock has been trending down, the underlying short interest pressure is undeniably significant. Remember, high CTB means high risk and potentially high reward, but it never guarantees a squeeze. Always conduct your own thorough due diligence. If you found this deep dive into VTAK helpful, please hit that like button, subscribe for more unique stock analyses, and let us know in the comments what hard-to-borrow stocks you're watching.